But I'm here to talk about crypto, blockchain, regulated era, and kind of what I think is kind of the next era of this market, which is going to be a very, very large era. Although it's probably not going to be a Cardano era. If I'm here to be honest with you and not sugarcoat it, I'm going to give you a little bit of a sense of kind of what I expect to see happen in this market, both the good news and the bad news. So let's start with the good news. Right. The good news is basically what we are in this market that we're in is becoming a regulated global market. And people usually think, oh, regulators, ooh, that's gross, terrible, right? But in fact, we need regulators because almost all the money on Earth is inside of this regulated environment. 99% of the world's assets are inside of regulated markets in the United States, the United Kingdom, the European Union. If you want to talk about really serious money, it's all regulated. There's no, the amount of money that we think of as kind of unregulated, flowing around in offshore environments, available for crypto is tiny, right, compared to the total amount. There's something on the order of $800 trillion of assets in the world. Crypto today has about $1.5 trillion of that. So global regulatory convergence is a really, really good thing. Unfortunately, we're all here in Las Vegas, so we know the US is a relatively less exciting market for that, right? We are behind the rest of the world, especially the European Union, which probably has the best regulatory structure and the biggest market environment ahead of us. So, but we still have a lot of gaps, like decentralized finance. That is basically unregulated on almost the entire world. It doesn't mean that there's no rules at all, but what it means is that there are no crypto and blockchain specific rules for DeFi. So if the rules for DeFi are clear, or if the rules for financial services are clear and you can comply with them, great. But if they're not, and nobody has spelled out what they should be on a blockchain in a decentralized version, then you might be facing some challenges. But other than DeFi, which I think is very, very important, real-world assets, stable coins, crypto assets, they're all becoming pretty good regulated assets around the world. The most important market in the world right now for crypto is the European Union. And this is really because the EU has put together a piece of legislation called MiCA, Markets in Crypto Assets. And MiCA is fantastic because it basically lays out the rules for almost any kind of crypto, any kind of real-world asset, any kind of asset-backed token. You can follow the rules. You can deploy in Europe, which is the world's, I would say, maybe second or third largest financial market ecosystem. And you can do so under relatively clear regulatory guidelines, which is fantastic. And that includes even stable coins, right? Euro stable coins, for example. So the EU is probably the best marketplace by far. It's not the only one. It's definitely the best. Now, I talked about this before, but let's come back to this, $800 trillion of assets that exist around the world, right? We have only touched the tiniest portion of it, right? Stable coins are 150 billion. Ethereum is 300 some billion. Bitcoin is a little over $1 trillion, right? All of that is almost nothing, even compared to gold. Gold is $13 trillion. There's $13 trillion of gold out there. There's $400 trillion in real estate. So the truth is that we really have just kind of scratched the surface in the world of crypto. Now, where do I think that there's significant room for growth? I think a couple of areas. Number one, gold, right? Bitcoin has laid out a position as digital gold. So whereas today there's about $14 trillion of market cap in gold, I think it's not unreasonable to imagine that 10, 20, 30 years from now, we can expect 14 trillion or more of Bitcoin digital assets, kind of digital gold layout. And then I think over on the tokenization side, it's going to be much, much bigger. Real estate is a really great example, right? We can tokenize real estate. We can make it transactable. State of California just put every single car title on the blockchain. Art, there's $1.7 trillion in art, $2.5 trillion in syndicated loans, right? There is literally hundreds of trillions of dollars of tokenizable assets from the real world. And I think that's probably, in a couple of decades, it's going to absolutely dwarf the amount of crypto that we have, which is tokenized real-world assets. Now, a couple of key things here. First of all, This is not a rising tide that's going to lift all boats. This is not just going to be like, hey, there's floods of liquidity, money for everybody. That is not actually what's going to happen. And the first thing is that most companies that want to play in this market are not ready to do so. And the reason that they're not ready to do so is that they are not fully regulated, right? So I talked about this right at the beginning. 99% of the world's assets are onshore today. But over 70% of all the crypto trading in the world is actually offshore. It's in unregulated marketplaces. It's in places like the British Virgin Islands or the Bahamas or Bermuda, right? And frankly speaking, the regulatory standards in these places are not the same as they are in the US or the UK or the European Union. And the consequence of that is that if you are in the BVI or the Bahamas and you want to go sell to a British pension fund in London, you are going to need to set up shop in London. You are going to need to operate in that market in order to serve those customers. And by the way, that's not cheap, right? And I want to give you a little bit of sense of like, what are people spending on regulatory compliance? Because it's serious money. You know, Binance, right? And these are people in a lot of trouble kind of with regulators around the world. They're spending $200 million a year on regulatory compliance. Coinbase committed in 2023 to increase their spending by $50 million a year, right? Kraken's increased their headcount by 50% a year. These are some actual data points. EY, we're an audit firm, so I kind of know what an audit costs, a serious audit, and it's about $10 to $15 million a year, right? So this is what you need to be audited in the US, the UK, the European Union, Japan, that kind of thing, right? Japan is actually a really great market. It's hugely underestimated in terms of size and opportunity and crypto friendliness. But again, very rigorous audit standards, not a cheap thing. So number one point I want to make is, if you are not ready from a regulatory standpoint, you cannot participate in this fund market. Number two, this is a bit of a winner-take-all market. I really do not believe that. So in the last go-round, right, there was a period where there was a flood of money. Everybody who had a token made money, right? And we are seeing a little bit of that right now, right? I was thinking about making the Paul with hat token just to kind of make a few bucks, monetize it, or Brody coin. But in all seriousness, like for the most part, this is mostly a winner-take-all market. And what I mean specifically by that is, first of all, Bitcoin is a great example. If you want to buy or sell a crypto asset, it probably should be Bitcoin. There are a bazillion cryptocurrencies out there. There's only one Bitcoin. And an analogy I would lead you to is, think about precious metals. Gold is 14 trillion in market cap. Silver is about 1.2 trillion, right? And then the rest of them, platinum, palladium, all the others, diamonds, like they are tiny, even tinier by comparison, right? It's not that silver is somehow a better or worse precious metal, or palladium or platinum are better or worse. The simple fact is that the world has chosen that gold is their preferred precious metal if you're going to stick it under your mattress or bury it in your backyard. It's going to be the same way with cryptocurrency, right? The value proposition of cryptocurrency is that it's rare, right? And so if people are going to pick only one cryptocurrency, that cryptocurrency is going to be Bitcoin. The market has already decided, right? So if you're hoping that this flood of liquidity is going to send every random token upwards, it's not. Bitcoin already won that game. Secondly, the way Bitcoin dominates crypto assets, Ethereum now dominates smart contracts. Smart contracts, digital assets, tokenized assets, this is an Ethereum game, right? And this nobody's going to throw anything here, hopefully, at me, but this is mostly an Ethereum game. The Ethereum ecosystem is on an order of magnitude, when you include L1 and L2s, something like 10 times larger than the next largest smart contract ecosystem. And again, it's not about which ecosystem is better. I hate getting sucked into that discussion because there is no simple answer like, oh, this one's better than that one, right? If Windows, nobody goes around saying Windows is the best of all possible desktop operating systems, but it is the one on 90% of the world's PCs. It's the same thing for Ethereum. If you want to sell digital assets to people with money and wallets, you need to put them on Ethereum. And if you don't, you will discover that you have created a digital asset and there's nobody there to buy it. And I'm not saying this theoretically. I have clients that are like, oh, we got a wonderful grant from XYZ blockchain. We put our stuff on there. We're struggling now because we don't have any volume. Yeah, of course you have no volume. There's no market cap there. There's no market cap. There's no buyers. There's no people with wallets, right? What's still missing? So we are very, very far from a like high adoption, high maturity market environment. Like we are still in the early days. I know it's 10 years on, right? Because I have way more gray hair than I did when I met Vitalik in 2014, right? We are 10 years on from the origin of kind of the smart contract ecosystems. There's still a lot of stuff missing. I would argue a couple of important things. Number one, the whole blockchain ecosystem, I mean, not just Ethereum, but all of them, way too complicated. If you have ever tried to explain to like your aunt or your grandmother or your uncle like how to buy an NFT, it is humiliating. Like it is really painful. Like, well, now you need to move money into your wallet, and you know you're going to need to wait till Tuesday because your bank account is now frozen. I'm really sorry about that, right? Your credit cards are all being revoked because you tried to buy crypto. But that's like a normal thing. It's way too complicated. It's way too difficult. And by the way, there's no privacy, and privacy especially is a deal killer for traders, anybody with a proprietary trading strategy. You don't want to share that with your competition. And it also means that you really can't run business applications in these environments. Now, I think all of these problems are solvable, right? Or they are being solved. For example, at EY, all of our business applications run with privacy, under zero knowledge, on public Ethereum, through APIs. So if you're an enterprise, and you want to run a procurement process, or you want to tokenize an asset or track it, you just use an API. You don't have to know anything about zero knowledge. You don't have to know anything about blockchains. You don't have to know anything about transaction queuing, gas fees, nothing. You don't have to know any of that. That is where I want to see all of these enterprise applications get to, and I think we have the tools with privacy technology to build things like financial services, dark markets, dark pools, automated liquidity pools where you can trade with privacy, right? This stuff is coming. We are not there yet, and there's still a huge amount of work to be done. Industrializing privacy is, for EY, it's our biggest priority. We have been working on this, I'm not kidding you, since 2017. We started work. In 2018, we showed a prototype of our privacy technology using zero knowledge. And it cost $100 to execute a single private transaction, and we needed to string together 2 consecutive blocks on Ethereum to finish it. Fast forward, we got it down to $2.50 a transaction. We're now down to under a penny. We're about a penny on the Polygon L2. We're about, well, this was a while ago, we're about 30 cents on the mainnet. We are just getting ready for the 4th version of our privacy system. It's a ZK rollup. 1 zero knowledge component for privacy and 1 zero knowledge component for scalability. So we'll have instant finality, scalability, and privacy for about a penny a transaction on the mainnet, right? And that is a really big deal. You'll be able to do serious volumes of transactions under privacy with other businesses. Now, we're also able to build complex smart contracts. And one of the ones that I'm really pleased with is we've built a tool called Contract Manager. Now, this is actually the 2nd version of Contract Manager that we built. The first version is in use at Microsoft today on a private Ethereum blockchain covering all of the Xbox video game network procurement. So every video game, if you buy a video game on the Xbox network, the payment for that by Microsoft to their suppliers is processed on a smart contract on a private Ethereum blockchain that EY developed for Microsoft. And what we did was basically we took all of these rules, right, the buyer's agreement and the seller's agreement, and we turned them into a smart contract. But what we've done in the 2nd version of this project is turn that smart contract into a zero knowledge circuit that you can run on the public Ethereum blockchain. So you can have large-scale business-to-business transactions running with privacy on the public Ethereum blockchain. And the first customer who's doing this right now is a company in Australia that's buying renewable electricity under privacy through the Ethereum mainnet. So, and this is all with complete privacy using zero-knowledge circuits. And we can do this with standard prices, rebates, price lists, discounts, tiered discounts, business partners. Like, we can build all the things that you would build into a typical enterprise purchasing agreement. We can put into a zero-knowledge circuit, and you can run it without having to depend on any centralized company. You don't have to use any centralized, like, procurement portal or anything like that. You can truly run fully automated private business contracts. The Central Bank of Brazil is using our technology to build private trading pools for their national central bank digital currency as well. So this stuff is really battle tested, it works well, and it's actually quite scalable. Last thing I want to talk about, timeline. So we go up, right? The typical experience of the sort of crypto world is we have a couple of great years, then somebody steals a couple $1 billion, right? They go to prison, then we have a really bad year, right? And then we sort of recover. And my argument is that's normal for an early stage business. What's cool though is I think those radical ups and downs are over. Now that we are becoming a regulated industry, like, your chances of another FTX happening are actually, I think, much lower. It will not protect you, by the way, from bad investment decisions, but the likelihood that your crypto will actually be stolen by a bad actor who's regulated onshore and audited is relatively low. The question now is, like, what does the future for the crypto and blockchain ecosystem look like? And this is where I really want people to think about a longer timeline than most people are used to thinking about. Right, we tend to think about, oh, this year, next year, but the reality is that really large industry transformations take somewhere between 15 and 25 years. And I benchmarked here 3 technology industry transformations that are good examples: network equipment, cloud computing, and smartphones. And what's interesting about each one of these industries is they had this period of somewhere between 15 and 25 years of growth, and that the average growth rate during this sort of period of mainstream adoption was 27% a year. That's not 200% a year, but it's 27% a year, but it's 27% a year for 20 to 25 years. Now, these are technology examples. I didn't bring the slide today, but I have a financial services example, which is it took about 30 years between 1950 and 1980. In 1950, the percentage of the average person's retirement fund that was in stocks and bonds was under 2%, or in stocks. 98% of it was basically in government bonds. Like, you just bought bonds. Your retirement plan was treasuries. Right now, like, anybody whose retirement plan is treasuries is basically going to work until they drop, right? But it took 30 years to go from 1% to 2% in stocks to 80% in stocks. So again, if you're thinking about the growth of the blockchain ecosystem, you need to be thinking about a 20 to 30 year timeline of 20 to 25% a year growth. That's the roadmap you're on. You all look like fairly young people. You can make your career in this. Like, you could spend the next 25 years hitting your sales targets every year at 25% a year growth. Like, that is a very good thing. Just don't let your boss sign you up for 200% a year growth targets. What does that mean, practically speaking? It means that by 2045, for example, the blockchain market cap should be roughly $227 trillion. And it's funny because when you tell people that, they're like, that's impossible, it'll never happen. That is a perfectly normal expectation based on the growth rates of other industries. It's not crazy talk, it's a normal expectation. $1.2 trillion a day of DEX volume. 423 million Ethereum transactions per day, right? That is a reasonable, middle-of-the-road expectation based on multiple other industries. And that's not crazy talk. I am not high. I can't believe I have to say that, but sometimes I have to explain that. So, I would like to finish up by offering you something that EY's legal department assures me is absolutely not worth anything. It is an NFT. But if you like one, We mint them on the Polygon Proof of Stake network, and we send them to your wallet entirely free of charge. This is called, we jokingly refer to this as proof of Paul. It means you've met me or seen me in person, and you have an NFT to prove it. And I'll give you everybody like a second to do that. And those tokens are minted on the EOI blockchain platform. So that's an example of some of the stuff that we build and do. We build and execute software at scale. So I think that's it for me. Do we have any questions, complaints? Gratuitous flattery, I will always accept. No, in that case, you've been a fantastic audience, and I hope you all have a terrific afternoon. Ciao.
Fire up that wallet and delegate your ADA to Rare Stake Pool. For over 3 years, Rare has been committed to providing high-quality staking services. Thank you for your support.